Back, friends. So we saw a good hike in the price of oil over the weekend, and 7% rise immediately on the back of Israel attack on Iran. All this led to a lot of confusion and concern over the Strait of Hormuz being blocked by Iran. Now, today we see the prices having clawed back. In fact, they're down 2% at the time of recording this video. Stock markets also across the world have rallied. It's not a furious rally, but Dow, even at this point of time, it's up 350 points. So it's not something like outlandish 1,000 points. What's going on? Even on Friday, the markets fell, but at some point of time, they stopped falling and recovered. This was in India, in Asia, in United States. Why is the market not falling as much on the back of such negative news emanating out of the Middle East? Friends, the answer to this question goes back to oil. Oil prices was reflecting the risk premium that is attached to this type of a trade. Oil prices had jumped as the Israel and Iran exchange strikes, while gold prices have rallied as investors sought refuge in the safe haven metal. As of now, you see the gold is down $20 troy ounce. So the question is that the market is unlikely to reprice beyond the initial risk premium. Until then, it remains a tactical rather than a strategic event, offering a good excuse for the traders to take profits and reassess their positioning. China released its retail sales and industrial output figures. Retail sales jumped 6.4% from the previous year. That was a good thing. And although the industrial output growth slowed to 5.8%, but retail sales, and that has been the Chinese consumer has been an important piece of data. It has been the weakness of the Chinese consumer which is causing the repricing in the market time to time. When the retail sales goes up, this was a very important piece of data which came out today morning. Now, when the investors are trying to price in the moment, many geopolitical risks do come on the horizon. But what is of paramount importance, and that is something that you need to bear in mind, is that it is not only the geopolitical risks, but the overall state of the world economy that is being taken into consideration. Let me explain this in a little important manner, because this will tell you where the markets are headed from here. See, Israel's attack on Iranian nuclear facilities escalated to back and forth missile volleys that are still continuing. Much is at stake. Markets, as always, are focusing on what they can most easily quantify, that is the oil price, right? Consensus is that while the prices might go higher from here, the chance of a big spiraling increase is big low. Because even the Strait of Hormuz, they're saying it has never happened in history. It has only been a talk that it would happen, because a lot of the Chinese oil that flows from Iran to China also goes to the Strait of Hormuz. If it is closed, then China will also be impacted, and China is one of the allies of Iran. The reason to believe that the conflict will remain contained as well is well rehearsed. Iran is in a weak position. Israel has got good United States support, and so on and so forth. Recent history of the oil price provides some useful context. With the exception of the Russia's invasion of Ukraine, the big sustained swings in the oil price since the turn of the millennium have been driven by the broader geo-economic trends, not geopolitical events. Now, why is this conflict not like the Ukraine war? Because Russia is a much bigger producer of both oil and gas than Iran, and because Europe's concentrated dependence on Russian supply required a major rearrangement of supply chains. Also, the world economy was picking up steam at the time of the Russia-Ukraine war, resulting in higher oil demand. The global economy is currently projected to slow down. with tariffs, with being one of the factors. Although President Trump says so, and I respect him, that it could be resolved very soon. That said, the geopolitical events often cause short-term dislocation in the oil price, although sometimes the direction of change can be counterintuitive. The US invasion of Iraq momentarily brought down the oil price in March 2003 rather than pushing it up, although it rose again thereafter. Generally, unstable events in the Middle East, particularly those that directly affect oil production or exports, add to the oil price. One of the biggest intraday movements in recent history came in 2019 when Iranian drone attacks hit oil fields and vast oil processing facilities in Saudi Arabia, taking them offline for several days and putting a dent in the global supply. In 2023, when Hamas attacked southern Israel, the price popped as people feared full-fledged regional escalation, but none materialized. Since then, the market has learned to shrug off rising tensions in the region. When Iran and Israel came to blows in April 2024 and October 2024, day-to-day moves were mostly restrained. But this week's events are clearly different in kind, and while the price increases do seem like to be contained, low probability, high impact outcomes called as tail risks must not be ignored. And I repeat it. There is one possibility that Israel, provoked by attacks on its cities, strikes Iran's main oil export facilities on the Kharg island. So far, Israel's strikes have been only targeted on Iran's domestic oil economy. Once its ability to export is compromised, then Iran has less to lose by mining the Strait of Hormuz and might start hitting other countries' regional oil facilities as well, in a repeat of the 2019 strike. A wider war could ensue then. Once the situation spirals, all the tail risks will come into play at once. They are not independent risks, so even a 1 to 2% increase in the probability of these things could move the oil price dramatically, so don't go to sleep. Italy, Greece, and Spain emerge as winners in the whole thing that is going on, the game that's going on. The important thing to keep in mind is that the tail risks, although they are looking far and far in between at this point of time, but they could emerge at any aspect at any point of time. That's why the war is meant to be constrained to the limited extent possible. Once this goes any further from here and it affects Iran's export capabilities, then I think this can turn ugly and oil prices may begin to rise, although it may also be momentary. What is the reason why it may be short-lived, the rise of oil? Because world economy is currently slowing down. Across the world, you see things are getting slow. Even in India, you saw the Reserve Bank of India sharply cut repo rates and backed it up with 100 basis points cut in CRR. Why? Because they are seeing, and the GDP numbers are fine, but they are seeing that consumers are not coming to the stores. Things are slowing down. Even in the United States, the retail consumer is beginning to back off. The people are not taking flights. They are not traveling overseas. The tariff game has yet to play its entirety, and the effects of tariffs are yet to be fully felt. In such a scenario, oil price rise, except if it's like a dramatic rise, has been very muted. But should things turn, so the next few days will be crucial. I believe that do not write it off completely. There is every chance of some tail risk. It may not be a very big risk at this point of time as it appears to the international community, but you cannot rule it out. I caution many people who come and watch our videos. They poured in from many places and write comments. They should watch. Please watch my video and read my lips carefully. If these things go out of hand, then you will find that the market may begin to price oil at a much higher rate. And till then, it seems constrained to rise as much. Markets also, even in the United States, currently up, but they're not up. They're up by just a whisker. They are not up dramatically, which means that the market is in a wait and watch. I think the actions for the next few days are crucial. And to get to know more, what we believe is the most likely outcome and how this Iran-Israel war could end, what will be the final impact on the oil prices and the stock markets globally. Do join our Prime Plus Telegram group, which is addressed specifically for the US markets. You can do that by WhatsApping us on 732-732-2720 for the Indian stock markets. You can join Premium Value Plus, which gives you 1 week predictions in advance. Number to get in touch, 9820861044. We would be happy to share with you our analysis of what we believe is the most likely scenario, geo-economic and geopolitical, and net impact on stock markets. Happy investing. Have a nice day. Take care. Bye-bye.